Today's news brings crucial updates from around the globe, including a significant stock market crash, a Federal Reserve interest rate decision, and major corporate earnings reports. Stay tuned as we break down these impactful stories. Here are today's top 10 stories you need to know. Today, several major corporations released their quarterly earnings, impacting investor sentiment. Among the notable mentions, Caterpillar experienced a decline in stock price following a downgrade by an analyst who changed the rating from buy to hold. This downgrade appears to have influenced traders as they anticipate the company's upcoming earnings report. Caterpillar's stock has been under pressure as investors reassess its valuation amid market volatility. Concurrently, other companies such as Walmart and Target also reported mixed results, prompting concerns about consumer spending amidst rising inflation. Analysts are closely watching these reports for insights into the broader economic landscape. Companies are grappling with increasing operational costs, and the message from these earnings calls could guide investor expectations moving forward. The ongoing earnings season serves as a critical indicator of corporate health and economic resilience. As these reports unfold, traders will be keen to see how companies adapt to challenging market conditions and what strategies they will employ to sustain growth. In a significant economic announcement, the Federal Reserve has decided to keep the federal funds rate steady within the range of 3.50% to 3.75%. This marks the fifth consecutive meeting where the rate has remained unchanged. The decision indicates the Fed's cautious approach in navigating the current economic landscape, particularly amid persistent inflationary pressures. By maintaining the rate, the Fed aims to support economic growth while avoiding potential overheating. This approach reflects lessons learned from past stagflation crises, emphasizing the need for balance in monetary policy. Economic observers will analyze the implications of this decision on borrowing costs and consumer spending. The Fed's next steps will be closely monitored as inflationary trends continue to challenge economic stability. As the economy evolves, the Fed faces the delicate task of fostering growth while managing inflation expectations. The broader markets are likely to react following this announcement, and analysts will be watching for any signals regarding future rate adjustments. The recent surge in energy prices has led to a dramatic shift in the stock market, particularly benefiting energy-linked companies. Today, shares of Indonesia Energy Corporation soared by over 22%, reflecting heightened investor interest amid rising oil prices. This increase comes as global markets face significant volatility, with the Dow Jones Industrial Average opening with a staggering 900-point loss. As energy costs rise, investors are reevaluating their portfolios, shifting towards sectors that show resilience in turbulent times. The spike in oil prices is attributed to various factors, including geopolitical tensions and supply chain disruptions. Analysts suggest that the energy sector may continue to attract investment as uncertainty looms over other industries, particularly technology and consumer discretionary sectors that are facing downward pressure. The contrasting performance in the energy sector highlights a bifurcation in market trends, with certain stocks thriving while others struggle. As the situation develops, further volatility is expected, and market participants will be keen to assess the sustainability of these energy gains. The U.S. stock market experienced a significant downturn today, marking one of the largest consecutive crashes in recent history. The Dow Jones Industrial Average plummeted nearly 2% within the first 20 minutes of trading, reflecting broader market fears. This rapid decline was triggered by disappointing jobs data, which failed to meet investor expectations and fueled concerns about economic growth. The S&P 500 and Nasdaq followed suit, both tumbling sharply as investors reacted to the news. Analysts are attributing this downturn to a combination of factors, including rising inflation rates and uncertainty surrounding future economic policies. As major indices continue to show weakness, market analysts are urging investors to exercise caution and reassess their strategies. The volatility seen today underscores the fragility of the current economic recovery, with many questioning the sustainability of recent market gains. Looking ahead, The market's ability to stabilize will depend on upcoming economic indicators and the Federal Reserve's responses to evolving conditions. In corporate news, the acquisition of Select Medical has been officially completed, with the stock ceasing to trade on the New York Stock Exchange. The merger, which became effective on July 1, 2026, has positioned a consortium of investors in control of the company. This transaction is significant as it marks a strategic consolidation in the healthcare sector, reflecting ongoing trends of mergers and acquisitions aimed at enhancing operational efficiencies. The implications of this acquisition will unfold in the coming months as the new management team implements its vision for growth and innovation. Stakeholders are keen to see how the merger will affect service delivery and market competitiveness. As the healthcare landscape continues to evolve, such consolidations may become commonplace, driven by the need for scalability and improved patient care. Future developments will likely focus on how the new entity navigates existing challenges and capitalizes on emerging opportunities within the healthcare sector. Global inflationary pressures continue to be a focal point for economies worldwide, with various regions experiencing rising costs across essential goods and services. This surge in inflation is driven by several factors, including skyrocketing energy prices, persistent supply chain disruptions stemming from the pandemic, and the lingering effects of expansive monetary policies adopted during previous economic crises. As inflation rates soar, central banks face the daunting challenge of balancing economic growth with the need for price stability. The ramifications of these inflationary trends are far-reaching, impacting consumer behavior and business operations alike. Many households are feeling the strain as their purchasing power diminishes, prompting shifts in spending habits towards more essential items. Economists are closely monitoring inflation indicators to forecast potential policy adjustments by central banks, including necessary interest rate changes. As nations navigate these turbulent economic waters, the urgency to address inflation becomes increasingly critical. Moving forward, policymakers may need to consider coordinated global responses to effectively stabilize economies and foster sustainable growth in the face of ongoing inflationary challenges. Tensions in East Asia are escalating as recent military maneuvers have heightened concerns among regional powers. Notably, increased military drills and naval operations in the South China Sea are drawing international attention and scrutiny. These actions appear to be a direct response to ongoing territorial disputes, particularly involving China, Vietnam, and the Philippines, as well as the increasing assertiveness of North Korea. The geopolitical climate is complicated by historical grievances, such as Japan's wartime actions and its current territorial disputes with South Korea. As nations bolster their military presence, the potential for miscalculations rises significantly, prompting urgent calls for diplomatic engagement to ease tensions. Analysts warn that a failure to address these issues could lead to unintended confrontations, which would have dire consequences for global trade and security. The international community is closely monitoring these developments, recognizing that stability in East Asia is crucial for economic prosperity. Looking ahead, regional leaders must prioritize dialogue and cooperation to mitigate risks and foster a more peaceful environment. Southeast Asia is grappling with a series of natural disasters that have caused widespread disruption and humanitarian crises. Recent reports indicate severe flooding and landslides in various countries, displacing thousands of residents and leading to significant property damage. The impact of climate change has intensified the frequency and severity of such events, prompting urgent calls for disaster response and recovery efforts. Governments are mobilizing resources to provide aid and support to affected communities, but the scale of the disasters poses substantial challenges. International organizations are joining the response efforts, aiming to deliver essential supplies and assistance to those in need. The long-term implications of these disasters are concerning as infrastructure is damaged and livelihoods are disrupted. Recovery efforts will require coordination among local, national, and international stakeholders to rebuild and strengthen resilience against future events. As the situation evolves, the focus will be on ensuring that affected populations receive adequate support and that lessons are learned to better prepare for similar challenges ahead. The ongoing conflict in the Middle East has escalated dramatically, with renewed hostilities reported in various regions. Recent clashes between armed groups and military forces have resulted in significant casualties and widespread destruction. This surge in violence comes amid a backdrop of long-standing political tensions rooted in historical grievances and territorial disputes. External influences, including foreign military interventions and geopolitical interests, further complicate peace efforts, making dialogue increasingly difficult. Humanitarian organizations are raising alarms over the dire conditions faced by civilians caught in the crossfire, with reports of food shortages, lack of medical care, and displacement. The urgent calls for ceasefire negotiations reflect the immediate need to protect vulnerable populations. The international community is closely monitoring the developments, with diplomatic efforts aimed at de-escalation. As violence continues to escalate, the impact on regional stability and global security cannot be understated, with potential repercussions for international trade and migration patterns. Observers warn that failure to address the underlying issues may lead to prolonged conflict and further humanitarian crises. Moving forward, stakeholders must prioritize constructive dialogue and collaboration to forge a sustainable resolution, focusing on socioeconomic development and reconciliation efforts that address the root causes of the conflict. The United States economy is currently grappling with significant concerns over potential stagflation, a situation marked by stagnant economic growth and persistently high inflation rates. Recent economic indicators, including a rise in consumer prices and supply chain disruptions, have alarmed both policymakers and analysts. The Federal Reserve's decision to maintain interest rates reflects a cautious stance amid these economic challenges, but many fear that prolonged inflation could hinder recovery efforts. As inflation erodes purchasing power, households are adjusting their spending habits, prioritizing essential goods over discretionary items. This shift can lead to decreased demand in various sectors, further complicating the economic landscape. The implications of stagflation are far-reaching, impacting employment rates and overall economic stability. Businesses may face increased costs, leading to layoffs or reduced hiring as they struggle to manage their expenses amid rising prices. Experts are actively debating the effectiveness of traditional monetary policy tools, questioning whether they can adequately address these unprecedented conditions. The urgency for decisive and effective measures is evident as the economy navigates these turbulent waters. Stakeholders across various sectors are closely monitoring developments, and the responses from policymakers will be critical. In the coming weeks, the focus will be on whether the economy can sidestep the pitfalls of stagflation and return to a trajectory of sustainable growth, fostering confidence among consumers and businesses alike. Thank you for joining us for today's News Roundup. Which story surprised you the most? Let us know in the comments below, and don't forget to like and subscribe for more updates.